This is a special podcast presentation from 700WLW.com. This is Casey Boland on Demand.
And Casey Boland standing by. Casey's with Hanghold Capital Management. And investing, Casey, we're talking about investing for the long term. And you're making a point that some people think the idea is to get in there and just beat the S&P 500.
Well, I think that's oftentimes what the investment objective is. It's why to beat the market. And they say the market, it's the S&P 500. When you really sit back and think, well, what's my true investment objective? And your true investment objective really is to make sure you can accumulate a nest egg that's going to be able to provide you enough cash flow and income that's going to keep up with inflation as long as you do. So really your investment objective is not really beating the market per se. It's really better defined as long-term financial security.
So the idea is to be financially independent, and how you get there is a different matter.
That's right. So the goal still is your assets need to grow, so you do require a certain level of power, which is measured by rate of return. But that's only half the equation. The other equation, part of it is the stability factor. How much does your portfolio bounce around? How much risk are you taking? In recent years, the S&P has done very, very well. It's had great performance. And, did you beat the market? If you did, good for you. Not many people have been able to do that. But let's say the stock market, the S&P, had a tough 2-year stretch. It was down 25% each year. And again, you beat the S&P, but you were down 22% of those years. Yeah, you've accomplished the goal of beating the market, but, how are you doing with your goal of long-term financial security now?
Winning the battle, losing the war.
That's right, and then you have to keep that in mind with investing. So long-term financial security, long-term financial independence, that's what's about. You're accumulating assets so your portfolio can provide you income or retirement that keeps up with inflation. So the goal is to build a portfolio that provides that growth, but you need to do it without taking undue risk. If you're focusing too much on return, you're not factoring in risk, that may be set up for failure in the long term.